Hey everyone, Dalton Grados, the Grados Capital here, and today we're going to be talking about how to actually find and determine and execute an edge in the markets. That's what trading is we have to have an edge to trade. But first, I wanted to point out that if you want to get my edge and sort of my plan for the day and my analysis and my scenarios and how I plan to approach the day, sent to your inbox each and every day, I have a pre-market newsletter that I send out. And you can go ahead and subscribe to that at the link in the description. The first link, it's a free, totally 100% free newsletter. But each day I look at the market, the S&P futures. I give you my analysis and my scenarios, sort of what I'm looking at and how I'm going to approach the day. And so you can go ahead and subscribe to that for free. First link in the description. Now, let's go ahead and talk about edge in the markets, because that's what we need in order to put on a trade is a clear edge. So what exactly is an edge? I've pulled up the 5 fundamental truths which are outlined by Mark Douglas. And if you haven't read any Mark Douglas, they are totally foundational in trading books. But these are his 5 fundamental truths. We've talked about them before in other videos. Anything can happen. You don't need to know what's going to happen next in order to make money. Random distribution, wins and losses. Now, what I'm going to focus on for today is number 4. An edge is nothing more than an indication of a higher probability of one thing happening over another. That's it. That's it. Nothing real special, really. An edge, nothing more than an indication of a higher probability of one thing happening over another. So, is there a higher probability of this market going up based on X, Y, and Z? Is there a higher probability of it going down? We don't need to know what's going to happen next. We don't need, there's going to be a random distribution of wins and losses. But at the end of the day, our edge is just determining what's the higher probability, right? And so I'm going to take you through that. I'm going to, sort of hold your hand here and walk you through, how I go about determining an edge. So for the record, I did not predetermine anything here. I'm just going to pick a random day to preload. This is the NinjaTrader Market Replay feature. Super helpful. I've made another video about how you can use it, but let's just go to, last week, maybe April 19th. I literally have, it's just going to be like trading live because I didn't pre-select this and I don't know what happened on this day. Just like on any given day, we don't know what's going to happen. So we're going to download this day. Okay. Okay, we need to disconnect that. Okay. All right. And we did the 19th. Okay, perfect. So I'm going to pull up my chart here. Now, I am a price action trader. So I'm going to be taking you through price action, okay? Now, we're going to start with 15-minute charts. Now, here's the thing. With indicators, if you have indicators that you love and love to use, that's great if they work, if it's working for you. What I have found throughout my trading and sort of as I have progressed as a trader is that the indicators really are just lagging indicators by price and volume. So if you really the price action is just telling you everything in real time, and all of the indicators are lagging behind it. So anytime you get a moving averages move, MACD, RSI, all these indicators that exist, they're flowing in retrospect to price. So I love just looking at the price action, and it's really telling me, in my opinion, how buyers and sellers are behaving. So again, if you have indicators that you like to use, nothing against that. I have removed indicators as the years have gone by. I started with all the indicators, and then I've removed them to now just naked charts. So let's go ahead. Okay, let's go ahead and do this start date maybe on the 17th, and we're gonna hit play, and this is going to be This is going to be 15-minute candles, so, and we're going to play this. Let's start on the 19th. Okay. You see I'm doing this in real time, so, all right. 9:35, 5 minutes after the market open. And let's do it maybe 10x. Maybe we'll do it a little slower so we can sort of evaluate the market here. 6x speed. Okay. All right. So now we're trading. It is April 19th. And we got some historical data here. Starting at 9:37 a.m. All right. So let's go ahead and just look at this market here. I'm on a 15-minute chart. So what am I seeing? I'm seeing this area up here to be an area of interest. Well, I could draw a rectangle. I was going to say to save time, I might not. Yeah, I might not draw anything just to save time in the video. But see here, this area, we have an area of consolidation right between like 4170. 4170s, we have the 4165 area, also being an area where we had a liquidity grab over here. So you see my mouse. Maybe I'll make my mouse more visible. Here we go. There we go. You should be able to see that better. Yeah. So I see this area as a potential resistance. Right. Okay. Let's actually zoom out to maybe an hourly chart. Okay, so we're loading a few days of data here, but we're trading on what would be the 19th. Okay, big supply-demand zones right here. You see this all along here. This is an area where we have continually supported and now could have resistance if we come up to it. Okay, I'm also seeing down here some higher lows, right? So we're sort of making, it looks like we're sort of making this wedge pattern. You know, we have a high and then we have these higher lows here. So kind of a little bit tricky scenario to play out. But let's go ahead and drop to our 15-minute chart and see what price wants to do. And maybe I'll speed this up a little bit to 10 times speed. 20 times speed, maybe. I turn my chart trader on. There we go. Okay. All right. So right now, you know what my edge would be? It's waiting. Right? There's not much that the market is telling us. It's, you know, and I posted in my newsletter before, the very important questions to ask yourself while you're trading is, what is the market doing? What is the market trying to do, and how good of a job is it doing at that? Right now, this market is not telling me to trade, and that's an important discipline. That could be part of my edge, is knowing when not to trade, right? Because then the trades I do take are, you know, trades that have high odds to them, and I'm not cluttering my P&L with a bunch of unnecessary losses, right? Okay, so it looks like we are moving up here, and we're testing this demand zone, right? You see, we came up, supported it before. So now this is an area I'm interested in. I'm interested to see now if this is going to break above and maybe come back and retest, at which point I could perhaps go long, or I'm interested to see if it's going to reject and make a move lower, and then perhaps retest and make a lower high. So you notice here, and this is very important, I think this is a big thing, I think that for me personally that shifted in my trading over the past maybe a year and a half or so, that I really sort of started finding my groove, is I'm making scenarios. I'm coming up with scenarios. I see this level, and I'm not saying, oh, I got to short it, or oh, I got to go long. I'm seeing, this is what I want to see now. This is what I want to see now. I want to see it either break, come up and retest on the upside, or reject for the downside. Okay, we are at 10:40 a.m. Keep in mind we're going 20 times speed. These are 15-minute candles. Maybe I'll drop down to a 5-minute. Okay, it looks like we're breaking. It looks like we're breaking. Now, oh, there's a good flush there. Liquidation. Now again, like I said, I did not prepare this. This is totally live. We might take a losing trade. Okay, it looks like we are breaking and we retested and are supporting here. So let's see if I can maybe slow it down a bit. And again, slowing down is still 8 times speed, so in real time, this moves much slower, right? We're waiting a lot longer. So look at this 5-minute chart. We got the top of this area. I think I like long here. All right. I think I like a long here because we're testing this area. Now, where would I put my stop? Ideally, I'd put my stop. Well, if I wanted to keep it, see, I could place a loose stop, which would be like down here at the bottom of this, past this demand zone. Or I could place a tight stop. My tight stop would be, now you see I'm positive on the trade. My tight stop would be, actually, I'm a scalper. If I were in this, I'd probably move stop to break even right about now because I want it to go. But my tight stop would probably be underneath this low because we made higher lows, higher lows, higher lows. So if we came down, I'd probably put my stop there. Okay, see, it just got my break even. It did go up and was about 2 handles in the profit, which I could have took profit up there. That probably would have been a good place to take profit because, no, see, the pattern's still intact. We'll go long again just to keep the trade on. This could be a conservative place to take profit because it was the resistance that we just rejected at. So once it came up there, I could have took my 2 handles. But I was explaining where I'd put my stop, which I'll still reiterate. So my tight stop could be under this low here because we keep making higher lows. A more wide stop could be depending on how much we want to zoom out, kind of more under this time frame. Not time frame. This zone here. We could put our stop like under there. That would be a more loose zone. Okay, we got 2 handles on the ES is pretty good. That's $100 per contract. So far, I've had both of my trade attempts here hit over 2 handles. So I would probably lock in, and look, it looks like it's getting ready to go. Maybe I'll lock in a couple ticks and see if it wants to go. Now, where should I take profits? I could take profits here, or I could wait until it gets up to the 4180s, near 4180. That would be sort of my next demand zone again. So again, I'm taking you through these trades because I want you to see we're just coming up with how do we determine an edge, which is just a probability of one thing happening over another. So when I'm looking at this, again, just to kind of bring it back to our fundamental concept here, I'm looking at this and I'm saying, okay, I want this to break. I want this to break, actually. Okay, so I could have took profits there, but I wanted to see if it would break. So either way, we had 2 break-even trades there on this trade idea. But I'm looking to see, is there a probability of it going up or going down? What is the market showing me that it might have a higher probability of doing one thing over another? That is an edge. Now it looks like we're rejecting. Okay. Again, zooming out. Um, okay. Now you see how I brought my stops up to break even? That's me. Because I'm a more conservative trader. I'm pretty much a scalper. So, but I probably could have taken some profits, or if I had multiple contracts, maybe taken a partial profit up at this resistance. But for the purpose of this video, I wanted to see if it was going to break through. But for safety, I moved my stop up to break even, so I haven't lost any money. Okay, it looks like, let me see. We might retest. Remember our initial plan? We're not diverting from our initial plan. We wanted to see a break of this area and then come down and retest, which is what we're now doing. Now, we entered before on that pullback. Now it looks like it's going to retest our initial breakout area. Okay, this must have been a news event, if that's accurate. I don't know if this happened on that day or if this is just Ninja Trader's replay that made this big wick. I don't know if we had that or not on April 19th. Yeah, that could be just a little glitch in the software. But look at that, we came down, and that looks like almost like a liquidity grab to me, where we made that, where we broke structure. So this is what's a liquidity grab, which I often talk about. Here, let me get rid of these markers here. Okay. So sometimes we'll have a liquidity grab where price will break structure and then immediately come back up and engulf the previous candle. So they're basically, what they're doing is they're taking out all the stops down here and then getting their orders in to go long. And so that is sort of something to add to the narrative here. It's kind of being difficult. It's kind of in really a consolidation here on the 15-minute. Let's fast forward. See, because I probably wouldn't want to trade in this. I'd want it to be smooth. So what is this? This is a barcode, right? So again, bringing it back to our concept, there is no edge here. There is no probability of one thing happening over another. It's literally been staying in the same. I mean, these candle bodies are the same. They've been in the same range for how long is this? An hour or so? Now we're breaking up. Okay, so we had a liquidity grab to the downside. Now we're breaking up to the upside. I like this action. Now I'd want to wait for a good location to get in. Okay. I like that. I like this location. All right, look at that. I love trades that work out right away. I really want it to go. Okay, all three trades I've taken, we're at 3 handles. I'd love it for it to go. Really go. All 3 trades I've taken have given us at least 2 handles. 3.4 handles, look at that. That's $200 per contract. Okay, we're at 41.75. 41.80 would probably be my target area, but we probably don't get quite there because there's resistance there. So I took that trade off for profit. It went 4-ish handles. Again, I left this on at 20x speed, so it's kind of jumping pretty fast there. Obviously, this is, just for perspective, this is the real speed that things play out at. So I probably would have, obviously things are jumping around here in this example at that fast. But you see how all the trades we took went positive pretty quick. So if we wanted to be more conservative and scalp, we could have took two handles the second time, the second trade, could have took 4 handles on that trade, and targeting, up near 75, 76 area. So we had 3 profitable trades all in that instance. Now, why is that? Okay, first of all, when you have an edge in the markets, that doesn't mean your edge is always going to play out. We could have just easily had losses. I had, first 2 trades were ended up stopping out for break even though they did go to profit. So, but the probabilities are in my favor because of the price action and the levels I'm looking at. All of those 3 trades that I have taken in this video, the probabilities were in my favor that it would go up. It was showing me strength. It was showing me a breakthrough of a key level and then a retest to which it then supported. So buyers are supporting that. The market is just buyers and sellers. That's all it is. So the buyers came in, we retested, and the buyers held this area. That gives me a higher probability of upward movement. So that's why I went long, right? So hopefully this is helpful. And again, I'm not trying to make it seem like, I'm all whatever. I don't know what's going to happen. I just, am taking some trades on the price action and, letting the trade play out. And this was a live example. We just happened to get some good trades there. It could have easily, just as easily, say, again, if you're buying here or you're buying this breakout, right? This might be, call it 70% chance of profit. There's still a 30% chance that it just doesn't work out. Even though it looks good, even though the price is doing exactly what we're looking for and we're like trading our plan, it still sometimes just might not work out, and that's okay. Our job is just to execute our edge. And hopefully in this video you have seen some examples of at least how I develop an edge through analyzing price action, right? So that this would have been a great day. So we had 2, just say for example we took profits at the top of each trade. So 2 handles, $100. Another 2 handles, that's another $100, and then 4 handles, that's $200. That's $400 per contract that we just netted here. So good stuff. So anyway, like, comment, subscribe to the channel. Let me know what you'd like to see more of. And I just realized here in this market that it is 12:30, so this would be lunchtime. Market's slowing down. I probably wouldn't trade this anyway. But let me know what you want me to see more of. Let me know what you want to see more of. Sorry, and subscribe again to my free pre-market newsletter, so you can get my trade plan sent to you every single day. And it's definitely very useful. Even if you don't trade the S&P, if you trade other stocks, it's good to have some analysis on the S&P, the overall market. So again, that's free. Link in the description. Also, link in the description for Apex Trader funding, so you don't have to risk your own money. You can get funded by Apex Trader funding and keep 90% of the profits and have nothing to risk on your end. So pretty great deal there. Okay, I hope this was helpful. Again, like, comment, and I will see you guys next time.